Welcome back, everyone. Today we're diving into a topic that I know a lot of you are interested in trading, but we're going to be focusing on something specific. Uh, it's called micro trading,
Micro trading.
and it seems to be something that might be particularly appealing to folks who maybe are just getting started and don't have a huge amount of capital to work with. We're going to be looking at this ebook called Micro Trading, La strategia non convenzionale per trasformare piccoli capitali in grandi opportunità, which I think translates to something like
The unconventional strategy.
the unconventional strategy
Transform.
to transform small capital into big opportunities. So that's kind of a mouthful.
Yeah.
But
Yeah,
I think it gets at the heart of what we're talking about today.
it does.
This idea that you don't need to have a ton of money to get started with trading.
That's one of the things that's so fascinating about this approach. It really does challenge those classic trading myths. All those things that can make it feel like it's impossible for regular people to get involved. The idea that you need like massive amounts of money.
Exactly.
That you need to understand these incredibly complicated charts and this constant fear of huge losses.
Right.
All of that.
Like you need to be a Wall Street wizard to even have a chance.
Yeah, it's very off-putting, especially for new traders.
For sure. So this ebook is kind of suggesting that there's another way. So what are some of the key differences between this micro trading approach and the more kind of traditional approach that we see?
Well, I think the core principles really revolve around focusing on assets that have less volatility, working within much shorter time frames, and using what they call simplified analysis techniques.
Okay.
So it's about making smarter and more calculated moves without needing a PhD in finance.
Right. But when you talk about shorter time frames, isn't that incredibly risky?
Yeah.
It seems like you could lose everything in a blink of an eye.
Yeah, and that's a really common misconception. Micro trading really is all about managing your risk effectively. The ebook emphasizes that this isn't about chasing quick riches. It's about a disciplined approach to potentially growing your capital over time.
Okay.
And one of the key principles they highlight is never risking more than 1–2% of your total capital on any single trade.
So that sounds super conservative.
Yeah.
But I guess it makes sense if you're trying to avoid those big swings.
Exactly.
So how does this actually play out in practice? Like what kinds of assets are we talking about?
So instead of jumping into those high-risk stocks, micro trading might focus on something like a currency pair, like the euro against the British pound, or perhaps commodities like silver or platinum. The idea is to minimize those wild price swings, the kinds of swings that could really wipe out a small account.
Yeah, you're looking for stability. But where do these kind of micro opportunities come in?
Well, that's where the time frame comes into play. Okay, so imagine zooming in on a chart. Instead of looking at days or weeks, we're looking at 1-minute or 5-minute intervals.
Wow.
So you're really looking at those really short-term, what the book calls micro trends. Think of it as catching a wave early on, riding it for a short distance, and then getting out before it crashes.
I like that analogy.
Yeah.
But analyzing those tiny time frames, I mean, does that require some serious chart reading skills?
Not necessarily. That's the beauty of this approach. It's that focus on simplified analysis.
Okay.
So you don't have to be a technical analysis guru. Instead, what the book emphasizes is mastering some really basic indicators like moving averages, the RSI, and learning to recognize some common chart patterns like triangles or flags.
Okay. So it's about making those informed decisions without getting lost in the complexity.
Exactly. It's about empowering you to spot potential opportunities and then act decisively.
But even with those simplified analysis techniques, how do you protect yourself from the inevitable losses? I mean, no one can predict the market perfectly.
Right. And that's where the concept of stop loss and take profit orders comes in.
Okay.
These are essentially your safety nets.
Okay.
You're setting preset levels that will automatically close your trade if the price moves against you, which limits your potential losses,
right,
or if the price hits your desired profit level. Then it will lock in your gains.
So you're setting clear boundaries for each trade. And that in itself, I guess, takes away some of the emotional pressure.
Exactly. It takes away the guesswork. It takes away some of the emotion, which is especially valuable for people who are just starting out.
Right.
It encourages a more disciplined and systematic approach.
So this is all starting to make sense, but I'm curious about the actual step-by-step process. Like, where would someone even begin if they wanted to try this micro trading approach?
Well, the ebook lays it out pretty clearly. They emphasize choosing a user-friendly trading platform. and starting with a demo account. So you can practice without risking real money.
Oh, that's great.
Yeah, it's like taking a test drive before you hit the open road.
Yeah. So you can get familiar with the platform, test out some strategies, get your feet wet without any financial risk.
Exactly.
Okay.
And then it's about identifying those low volatility assets, conducting your simplified chart analysis, and setting up those all-important stop loss and take profit orders before you execute your trades.
It sounds like a much more approachable way to get involved in trading
Yep.
compared to, the traditional image of people staring at those complex charts all day long.
Yeah, and I think that's really the goal of micro trading, is to make it more accessible and less daunting, especially for people who are working with limited capital.
That's great. Well, this has been a really good overview of the core concepts behind micro trading. We've talked about debunking those traditional trading myths, focusing on low volatility assets, mastering those shorter time frames, and using those simplified analysis techniques. But there's still so much more to explore.
Yeah, there is.
Right.
In the next part of our deep dive, we're going to delve deeper into some of those specific tactics outlined in the ebook. We'll uncover how to select the right assets, how to master those short time frames, and how to utilize those simple but effective analysis techniques to identify those microtrends.
Okay, great. Looking forward to it.
Welcome back to our deep dive into micro trading.
Yeah.
Before the break, we were laying the groundwork, talking about how micro trading can be a more accessible approach than those kind of intimidating traditional methods.
Right. And you made a really good point about how managing risk is absolutely key in this strategy. It's not about gambling on those huge wins, but about making smart, calculated moves within those shorter time frames. So let's actually dig into some of the tactics outlined in this ebook. Where do we start?
Well, let's start with asset selection. The book stresses the importance of focusing on markets that are inherently less volatile. We touched on currency pairs a little bit before the break, like the euro against the British pound. These tend to have much smoother price movements compared to something like, say, a tech stock that could jump or crash overnight.
Right. But wouldn't that also mean potentially smaller profits?
Right.
It seems like you'd be sacrificing some potential gains for that stability.
Yeah, and that's where the beauty of those shorter time frames comes in. Okay, so while the price movements might be smaller, you're aiming for more frequent trades, you're capitalizing on these, you know what the book calls these micro trends
Okay.
that you might not even notice on a daily or weekly chart?
Right. Okay, so let's talk about those micro trends. How do you actually spot them? I know the book mentions simplified analysis techniques, but can you give us maybe a concrete example?
Yeah, absolutely. So imagine you're looking at a 5-minute chart of a currency pair, and instead of trying to predict these long-term movements, you're focusing on those subtle shifts in momentum. One technique that they highlight in the book is using something called a simple moving average, maybe like a 20-period moving average, to identify potential buy or sell signals.
Okay.
So if the price breaks above that moving average, it could signal an upward trend, and vice versa.
Okay. That sounds relatively easy to follow, but I imagine there's more to it than just looking at one indicator.
Oh, absolutely. No single indicator is foolproof. It's really about combining multiple signals.
Okay.
So the book also talks about using the RSI, which can help you gauge whether an asset is overbought or oversold. So for example, if the RSI is above 70, it might be a sign that the upward momentum is weakening and a pullback could be coming.
Okay, so you're looking for those confirmations, those
Okay.
points where multiple indicators are suggesting a similar move.
Exactly. And don't forget the importance of chart patterns. Even on these short time frames, you know those classic patterns like triangles or flags can offer really valuable clues about potential breakouts or reversals.
But wouldn't all this analysis take up a ton of time? I thought the point of microtrading was to seize those quick opportunities.
Yeah, and that's the beauty of the simplified approach. With a bit of practice, you can learn to recognize these key signals very quickly. It's about developing that pattern recognition, almost like a sixth sense for these market movements.
So it's a skill that takes time to develop,
Yeah.
but could be really rewarding once you get the hang of it.
Exactly. It's about training your eye to spot those subtle cues that most traders might miss.
Okay. But even if you're able to identify these micro trends, isn't there a risk of, getting caught up in the excitement?
Yeah.
And making impulsive decisions?
Yeah, and that's why the ebook really emphasizes that emotional discipline is a cornerstone of successful microtrading. It's about sticking to your plan and not letting fear or greed dictate your actions.
Right. Easier said than done, I imagine, especially when you're watching those price movements in real time.
Absolutely. And that's where those preset Stop loss and take profit orders become so crucial.
Right.
They act as your automated safeguards, preventing you from making those emotional decisions in the heat of the moment.
So they're like having those safety nets in place to
Exactly.
protect you from those impulsive moves.
Exactly. It's about removing the guesswork, sticking to your predefined strategy. Yeah, even if you miss a few trades, that's okay. It's about being consistent and disciplined over time.
So we've covered asset selection, utilizing those simplified analysis techniques to spot those microtrends, and then maintaining emotional discipline. Through those preset orders, it's a lot to take in, but it's starting to paint a clearer picture of how this approach works.
Yeah, and remember, this is really just scratching the surface. The ebook goes into much more detail on specific strategies and tactics, offers practical examples and case studies.
But there's one big question that's probably on everyone's mind. What about the potential for profits? What can someone realistically expect when starting out with micro trading? Is it really possible to grow your capital significantly using this approach? We're going to explore that and more. In the final part of our deep dive, welcome back to the final part of our deep dive into micro trading. We've covered a lot of ground, haven't we?
We have.
From choosing those right assets and analyzing those micro trends
Oh, yeah.
to mastering those, crucial risk management strategies.
Absolutely.
But I think now it's time to address the question that's likely on everyone's mind.
The big one.
Yeah, the big one, right? What about the potential for profits?
Exactly.
Can you actually make money doing this? So,
Right.
can you give us some insights into what some realistic expectations should be?
Well, I think it's important to start with a dose of reality here. Micro trading, just like any form of trading, it's not a magic formula for overnight riches. The ebook makes it very clear. This is about building a solid foundation, developing your skills, and approaching it with discipline and patience.
It's a journey, not a sprint.
Exactly.
But let's talk numbers for a moment. What kind of returns can someone realistically aim for with micro trading?
It's tricky to give a one-size-fits-all answer because it depends on so many factors. Your individual risk tolerance, the specific markets that you choose, the strategy that you're using, and of course the overall market conditions. But, experienced micro traders, they often aim for a consistent return of about 1-2% per month.
It might not sound like a lot compared to some of those get-rich-quick schemes that you see online.
Right.
But I guess it's about that slow and steady growth.
Exactly. It's about consistency. It's about sustainability. If you can consistently achieve even a modest return each month, that power of compounding can really work its magic over time.
Yeah, that makes sense. So let's say someone is ready to kind of dive into this approach. What are some key things they can do to set themselves up for success and to avoid those common pitfalls that can lead to losses?
One of the most important things is to develop a rock-solid trading plan. And this isn't just about picking a few assets. It's about outlining your entire strategy, your risk management rules,
Yeah.
your specific entry and exit points, your profit targets. Everything needs to be clearly defined.
So it's like having that roadmap to guide your decisions
Exactly.
and to prevent you from making those emotional moves in the heat of the moment.
Exactly. Your trading plan should be your North Star, helping you navigate the inevitable ups and downs of the market. And it should be a living document, something that you're constantly reviewing and refining as you gain experience.
It's about being adaptable and learning from your mistakes along the way.
Right.
And speaking of learning, you've also emphasized the importance of continuous education.
Oh, absolutely. The markets are constantly changing. You can never stop learning. The ebook highlights the value of really immersing yourself in the world of finance, staying up to date on market news, exploring different analysis techniques, and maybe even connecting with other traders to share insights.
So it's about being curious, being a student of the market,
Mm-hmm.
and always seeking to improve your skills.
Exactly. And don't be afraid to experiment. Test different strategies, see what works best for you, and adapt your approach as needed. It's about finding what aligns with your personality, your risk tolerance, and your overall trading goals.
So the key takeaways here are: approach microtrading with those realistic expectations, create that clear trading plan, and never stop learning and refining your skills.
Exactly. It's about discipline, patience,
Yeah.
and a willingness to embrace the journey.
Well, this has been a fascinating deep dive into the world of microtrading. We've explored its core principles, dug into some practical strategies, and hopefully equipped you with the knowledge to explore this approach further.
Yeah.
So if this deep dive has sparked your interest in the world of trading, why not take that next step? Subscribe to our channel, give this episode a like, and leave a comment below. Let us know what you think about microtrading. share your experiences, and ask any questions you might have.
Your participation really helps us build a vibrant community where we can all learn and grow together.
Awesome. Until next time, happy trading.